Good evening. This is the Elliott wave update for the NASDAQ 100 for Monday, February the 28th, 2022. Interesting day again. The markets ended, or let me start over. Interesting day today. The markets continued to move higher. And basically, at one point I thought, oh, they're going to go back and they're going to try to fill this gap. And sure enough, they did, and then some. So a little adjustment to the count, nothing too dramatic, but it does give us a little bit more room for rally. And whether that's kind of what we're expecting or what you might be expecting, it's a little bit interesting, but it's kind of what is happening right now. So let me just clean this up just a bit there. So this second wave is actually turning into a larger zigzag. So there's wave A, and it turns into a 5-wave advance. Wave B was yesterday's slam dunk of an opening. And now we are in that C wave. So what can we expect on the balance of this? As we understand via Elliott, all C waves must be 5-wave structures. So when I run some additional Fibonacci, first thing I did is I redid the retracements. So that's this larger, and those are here. Those are the retracements for going up for what a wave 2 can look like, where it can get to. And so of importance is that we've already gotten past 382, and we got past 50%, and that was all on Friday before this all began. And then we dropped back down, and now we're rising back up in the C wave. So Fibonacci relationships, and when we're running extensions, and we run them for the length of the A wave down to the bottom of the B wave, and that gives us the expected parameters that we can start to put around a C wave. Now, again, all C waves must be 5. So when we get inside of this C wave, we can start to break it down. And we can see, although my moving averages are all in the way, we can see that was the low. So we get a 1, a 2, and it looks like we got the 3 up to here, possibly a 4 back down this afternoon. And then the beginning stages of the the 5th wave up to complete the C wave. So we know that we need to get past this 50% marker, and also today's high, which actually came in a little bit more, 292.25. Hold on one second. I need to make an adjustment here to my midpoint. Yeah, I got that way off, don't I? How did I get that off? Oh, I brought it down to here. It's there to there. It's not to that midpoint. Sorry, never mind. So we have a high today at 292. So we already surpassed the 50%. And so what's up next is the 618 level. So on a Fibonacci basis, the relationship between an A wave and a C wave is that C can be, and very often is 0.618 times the length of the A wave. And that puts us right here at 4406.52. And if we go all the way across, we realize that on a retracement level, wave 2 would be 0.618 of wave 1 at that exact same level, 4406.52. So we could say 4406, 4407. So either one, but that's the zone. We do have a continued if the momentum continues, we'd have additional resistance at 14,508. And then we have it here at 14,603. And then again, that is 0.786 for the C wave, 0.705 for the wave 2. Now, beyond that, if the C wave is going to equal the A wave, we're getting up to 14,853. Now, being that we have stronger wave 2 Fibonacci resistance here in this zone. This is more, for me, the zone where I think all of this will complete, and then we'll again begin to turn lower. Now, one thing that I want to talk about today is that what we continue to see is money flowing into the market. But I want to make it clear that it's truly not necessarily evenly being distributed amongst the 100 stocks component members of the NASDAQ. So again, today, we saw it flow back into Tesla. We saw some flow back into Microsoft, but not on the same level. Google, but not on the same level. So we saw AMD kind of pick up some speed, but not on the same level. So if I went out and I started to look at other larger companies, Adobe, not bad, didn't really do much of anything. Google, not much of anything. Moderna, not much of anything. So it really was flowing back in to Tesla. But we did see money flow into the NASDAQ. But so that oftentimes it can be a little bit misleading because it's not all of the participants. It's a rally courtesy of the strength of today's rally was courtesy of Tesla. So yes, other component stocks contributed, but that was late. And that was in a broader basket purchasing all of the stocks within the NASDAQ. But the bulk of that was within Tesla. So that's why I think we may just see Tesla continue to push, but we get into here. So that's the zone that I think will be completing the wave 2, setting the stage for wave 3. Now, if it gets up to here or even up to here, it will not be breaking any rules, but I had to tell you, no matter where this thing ends up, I believe that it still has a nasty turn and another flip lower. So I wouldn't base a bullish picture on one stock out of the 100 basically going up today with strength, with the money flow pouring back into Tesla versus being more evenly distributed amongst all of the component companies. So for tomorrow, I am actually still looking for some additional upside. Failure here would put, at least I think I'd like to see it get up above 14,292, get above 14,300. We have some resistance at the 330 level, some resistance about 350-ish. Those are just price resistances. And then hopefully get itself up to 14,406 into that area. That would just make a nice and clean finish for us. And again, being able to count the 5 waves up. So I think for right now, if we start to break down, we need to break below the 200 on the hourly chart, which is sitting at 14,000 basically. And then again, break below the 50. So while the part of the picture has turned a little bit more bullish, it's not complete. The hourly moving averages are not in alignment. They are all pointing up, but the 50 remains below the 200. If the 50 moves above that 200, then we've got a lot more room probably to go. And that would add a boost to the buyers coming in. Again, this is all a part of not being evenly distributed amongst all of the component stocks. So I think that we need additional upside. We need to break above 14,292, put in a new high. We have that resistance on the way up, all the way up to 14,406. I think that'll be in a zone up there that will complete this. Coming off, we should again now not necessarily see larger corrective waves, but if we do, and it starts to break down, that might be it. We might have to call it a failure depending on what happens overnight. Again, So starting to break down, if it breaks below the 20, the 200, and then the 50, then I think we're heading back towards at least these support zones. 13,880, and then this low, 13,683. And then I will redo our Fibonacci on the outside. Come on. I'll just go out this way. Because what I had done is I removed our Fibonacci for the downside, so as not to conflict and have too many resistance and support lines. This is again retracements for the way up in the wave 2. This are the extensions for the C wave. Once that's complete, I will then again run up to the top, down to the bottom, up to the top of wave 2. So from here, length of wave 1, up to the length of wave 2, wherever it ends. And that's going to give us the anticipated parameters we could start wrapping around that third wave going down. I'm going to finish it right there. Continue to trade smart, the moves have been decent. They've been very clean. They've been very nice. Sometimes seemingly a little choppy, but that's mostly on the very lower timeframes. And so, or the smaller timeframes. So if we kind of move it out a little bit, you can see that the market still has that momentum to go in a particular direction. So maybe even putting on more of a swing trade was more appropriate for today. But even day trading, even getting in and out quickly, ended up being profitable. Again, do not get married to any side. Volatility being what it is, it increases on both the upside and the downside. So picking a top or picking a bottom can be very unfortunate experience. And so just be aware, use the moving averages for guides on the way up, also guides on the way down as they start to break, and use the Elliott, use the Fibonacci. Next update, March the 1st.